What is up, traders? My name is Heath, and this is Trade Talk. In tonight's video, we're going to discuss CADJPY as the targets were hit. The targets were pointed out in Sunday's Forex Weekly Outlook video I posted last Sunday, so we're going to go over that. We're also going to look at Eurnzd. It was a scalp that I took 2 weeks ago or last week. I can't exactly remember. However, that trade has turned into a swing trade, so we're going to take a look at that as well. So please stay tuned. Alright, what's up, guys? We're going to get started right here with CADJPY. In Sunday's video, I posted that we were going to be looking for this target right here, which is just the high of this candle to be taken out this week. Now, we did come down on the 11th and tagged this area. It was 81.230. Now, I'm going to go into a smaller time frame area so you can see where this thing found its support. Alright? Now, as you can see, it doesn't really touch it right there, but going into a smaller time frame, even to a 5 minute, I will find this this demand zone, or whatever you want to call it, over here. Bear with me. As you can see, I have it outlined right here, which is just this last bearish candle, alright, before price traded away. Now, I understand that it's not easy to spot these things, because why not this candle or this candle or this candle or this candle? I understand. Basically, with a move like this, you essentially have to let the move play out. You're never going to catch the low of a sell-off, and you're never going to catch the high of a buy, of a bullish market. So, in a sense, if you're trying to short a very bullish market, you're probably going to get run over, in the same with a shorting market, or a market that's selling off. If you try to buy the bottom, you're going to get smoked. So what you can do is you can find out where the market finds its support, all right? Then go and find the level that substantiates that area, all right? So let's go back over here. Now we have our line drawn in the sand, and let's find that line, and let's look at price. All right. Now, you can see it came down, but it did not quite touch it, all right? And this is a pretty hard sell-off, but the trend is up. You know what I'm saying? Like, if you look at this, the trend is up. The near-term trend is moving higher, all right? In every single market swing high or swing low, this is swing high, this is swing low, every single one of them has orders. All right, every single one. At every swing high and every swing low, someone is taking a trade based on what they see, what they perceive that's happening in the market at that given time. All right, so back over here, we didn't really hit it. However, how do you trade this? Well, if you're biased, if you're bullish, if you've got a bullish bias and you have a massive down move like this, it's not a massive move, but anybody that's short on this thing is obviously assuming that they are on the right side of the market. All right. So this right here was your market structure swing low on a 5 minute chart. This whole area was your swing low. All right. This last bearish candle, its closing price is your validator level. All right. You can see this wick down went lower than that, but it closed above it. And on this red candle here, you came down and you didn't even make it there before a strong bullish push. All right. So any retest, you can look to get short, look to get long, and you can put your stop under here. If I have to say this is not financial advice. Anything you hear or see on these videos is just me speaking from my crazy head. All right. However, if you decide that you want to try to scalp like this, you have to get comfortable with losses, all right? Because you're going to think that your bias is right in a lot of cases, and it's not going to be. However, the way that I trade is I take a 1% loss or a 0.5% loss here and there, and then boom, when you do hit one, you get, anywhere from 2 to 5 to 10 to 1 trade. So it essentially takes over the losses that you will incur. And you will incur losses trading this way. You will incur losses trading any style. I don't care which style it is. You will lose. So get used to losing. All right. Don't look at losing as, oh man, I lost money. Look at losing as, what did I do wrong? And how can I get better? All right. And as long as you have that mentality with that mindset, eventually you will start to catch on to this. All right, so you could have gotten long there, and boom. However, I would not have gotten long here. Why? Well, first off, this was a strong down push. All right, and we don't know what's going to happen after this down push. Any pop in price could have been looked at with selling intentions, meaning any short sellers that now have their bias or their criteria met in order to take a short trade, they're going to look to short any pops in prices. Now, I don't know what levels they're going to use, but you just understand what I'm trying to say. If they think that the market's going to continue lower, they're going to look for a pullback in price to get short, and hopefully it works out for them. So I wouldn't have gotten short there. You know what I'm saying? But that's just how I get short or I get long or however. Sorry, I wouldn't have got long there. However, I'm just basically explaining you how I dissect the market. I dissect the market 1 5-minute candle at a time. And it does get a little taxing because you are staring at the charts the whole time. But you have to learn how to be patient. To get these razor sharp precision entries in the market, you absolutely have to be patient. And you absolutely have to look at it like, look, I'm not going to be trading every day. Day trading does not mean taking a trade every single day. When you're a day trader, it just simply means that you scan the markets and you look for intraday opportunities every single day. But that doesn't mean you take trades every single day. If the market's not setting up or something's not happening, then you can't take a trade. But I must say, this week was tough on me, guys. I am down 2% on the week still. All right. I have not been able to get up out of there. So if you're keeping score, last week I was up 13%. This week I'm down 2%. So the first 10 days, I'm still golden. I'm still up 11%. So I'm still meeting my 1% goal. Now, let's go over here. Anywhere over here, when we came up out of here, anywhere out of here, we didn't meet any highs, right? We did not take that high out until this swing high here. When this push up, you took out this high with this swing high. That tells you something. What does it tell you? It tells you this. Well, shorters were looking to get short again on this thing as it's pushing up. They're looking for an entry to get short. All right. So if they didn't get short here on this kind of resistance area that you can see, then they probably got short up in here, anywhere in this area. You know what I mean? Because you had to push up and then blah. So when the market based out here, all right, and then started making higher highs and higher lows, you did have a lower swing low here, but then you shot immediately out of that area and you purged the stops resting above this high. That tells you that the market has a tendency to be stronger than weak. All right. Now, this happened after my time that I would take a trade. This right here was the time to enter this trade. Either there or on this push down. I did not take this trade, guys. I need to be real honest about this. I didn't take this trade. I'm only pointing it out because it hit the target. You know what I'm saying? So why even bring it up? Well, because it hit the target. That's important. To be able to call targets a week in advance and then the targets play out, that's a good thing. Now the target did not play out on Euro Yen. They're not always going to play out. All right, so anyways, on CAD Yen, we did hit that target. We have taken out the stops that were resting above that high there. So as of right now, there is no high probability on this trade. Will this trade keep going higher? I do not know. It did close an 8-hour candle above this high, so that's strong. It is strong. If I wake up in the morning and a red candle has completely taken out the low or the opening price of this bullish candle, then this will essentially be a fake breakout, and I will look to go lower. Look for price to move lower. All right, as long as you're closing bullish candles above 82.122, yeah, it's probably going to go higher. We can even go into a weekly chart here and find another level. All right, so you did break above this swing low here, the closing candles on a weekly basis. That's a swing low. You did close this candle above it. I'll go ahead and draw you a line here so you can see what I'm talking about. You close this weekly candle right here above it. So that indicates strength. All this was right here was a pullback. All right, this wick was a pullback into this candle's open. Not all the way to the open, but close enough. Retested, and that's where buyers re-entered this market. All right, aggressively, I might add, because once you touch that, boom, price took off, and you have taken out the target. So we will have to let this thing suss itself out before we move on. All right, so let's go to this Eurnzd trade. Now, this swing high, it's a lower swing high than this swing high, right? You have this swing high and then this swing high is lower, all right? All right, you pushed up into this area, right? And then you did close above it, but the next candle you immediately rejected and took out the low. And then this candle here was an attempt to get above and could not. And then you made a lower close, all right? The next candle, look at where you closed. You closed the mid-range of this down closing candle here, okay? So any push up into this area was an opportunity to look to get short, all right? And I was targeting that low down there. Let me go back into the 8 hour and show you. And it was well documented. It was this low right here, all right? We had pushed up and then we rolled over and we started closing 8 hour candles. And on this push up right here, this is where I look to get short, aiming for this low here. Now, this gets back into my when do I take profits? When do I take 2/3 of my position size off? All right, 2/3. Essentially saying that I'm leaving a position on just in case it catches a trend. All right. It doesn't happen often. Most of the time it comes right back up and it stops me out of the trade. However, this one right here has continued lower. So this one's working, right? And now the amount of money that you will make on moves like this will dwarf the amount of money that you made on the initial trade, right? Because the initial trade, you're only looking for a small amount. You do have a bigger position size, but that all gets cut down. Once you cut off that 2/3 position, you now only have 1/3 of the position left on. You move your stop to break even, and you just forget about it. You just forget about it and let it do its thing. You don't have to move your stop loss. You just move it to break even. All right? Because the only thing at this point that you're risking is the unrealized P&L. Your risk is completely off the table and you took profits, was a profitable trade. Therefore, your goal was met at that day. All right? Boom. Trade completed. Now, you are still risking the unrealized P&L. However, that is the house's money, so to speak. The casino's money, whatever you want to call it. That's what you're risking left on this trade. Now, once you make a leg lower on an 8 hour time frame, because it then becomes a swing trade, there's no point in looking at a smaller time frame. At this point, I'm only looking at the 8 hour. Once we made this swing high and then we broke below it right here on a closing basis, all right, we had a test back up into it and a fail. So this swing low would be a good spot to put my stop, right? Just like that. Or if I don't want to lose any money that I have resting on the position still, I can essentially just take it down below this swing low or this swing high, but I wouldn't leave it right there. I would move it a little bit higher just to give the market room for a false breakout or a stop run before it wants to continue lower. If it wants to continue lower. If it pushes up and takes me out of the trade, I don't care. It's golden. The trade was already successful. Everything else is just cake. You know what I'm saying? It's just cake. It's just more goodness to add to the flavor. Yep. So that's pretty much all I got for you guys. Yeah. So if you got anything you want me to take a look at, just put it down in the comment section below. Remember, give me a time horizon as to what you're looking for, and I will do my best to analyze that pair for you, whether you like what I have to say or not. So thank you guys. Thank you for everything. Please like and subscribe and all that jazz, and we will catch you next time.